Good morning, traders and investors. Roger Scott here, Senior Strategist of WealthPress. Today is Wednesday, it's July 19th. It's about 7:50 in the morning. The market's going to gear up to open up in about an hour and 40 minutes to be as specific as I can with you. Now, as you can see here, the Nasdaq's up about 18 points. The Dow's down 3 points. Total randomness, and I mean total randomness. Now, before we get too far into this video, a few things I want to remind you. Make sure to subscribe to our YouTube WealthPress channel. That's where I post these videos first thing in the morning. Make sure to like those videos if you enjoy these videos. Interact with me. Post some questions. I'll respond. Say hello to me. Do something. I want to know you're there watching these videos. And most importantly, subscribe to our Telegram channel. Go to rogerscott.com/Telegram, or you could see the link below this video, whether you're watching it on our website or on the YouTube channel. Lastly, I've opened up my VIP room in the summer to the public, no cost. It's happening today at noon. That's right. You can also find the link in the YouTube WealthPress channel, in the Telegram channel, or on the page you're watching this video. Now let's get into all of this. What are we wasting our time for, all of this information? All right, so as you can see here, the markets are fairly random. Now, a few things. I mentioned the last couple of days, I was getting a little bit bearish on the bond market because it broke the low, but I mentioned to you that if it takes out the high, if it takes out the 102 level right here, and it looked like it did yesterday, and this morning it's already at 102.23. And right now we're pricing in, and I'll get into this in a minute, but we're like pricing in the fact that the Fed is going to raise rates by 1/4 of a basis point. It's going to be like a 99 percentile. It's going to happen. So I think there's a chance, if the Fed news and earnings are reasonable, if there's nothing, if nobody throws or trips us in the next couple of days, and if the economy shows no signs of slowing down towards the end of this week, we may see the price of bonds go up to the 104 level. If it does, we'll see how it reacts around here, because if it breaks the 104, it can go higher, but we're not there yet. But the fact that we're above 102 is a positive sign that this was just a little pullback and we are in fact going higher. Now, as far as Fed data today, retail sales were a little bit weaker than expected. Industrial production was weaker than expected, but earnings on financials yesterday were just smoking hot. I mean, everything looked really good. All the large cap bank stocks, which is a sign that the Fed is going to keep things steady for the foreseeable future, which is one of the reasons why the bond market's going higher. Today we've got housing starts and petroleum, a status report. Keep your eye on the petroleum status report, especially how the energy market reacts to it. The last few weeks, and actually the last month and a half, energies just have not been as bullish as they were about a year ago. I mean, the things that would cause us to have a major rally are just doing nothing right now. It looks like all the action has turned into the financial sector. Tomorrow we've got jobless claim, manufacturing, existing home sales. But again, keep your eye on the home builder stocks today, because if the housing starts and permits are good, stocks like Pulte, which I'll talk about in a little bit, may be rallying some more. Now let's talk a little bit about what to expect. And remember, today's Wednesday. I'm going to give you some red meat. I'm going to give you my favorite stocks right now and stocks to short, all coming your way in just a few minutes. So let's talk a little bit about what we can expect. Investors waited the latest batch of earnings reports from major companies and digested U.S. retail sales data. Earnings have been controlling this market. It's not the Fed. It's not the economy so much. It's earnings right now. But the economy has been fairly stable. We notched a 15-week high on the Dow. Nasdaq notched a 1.5-year high. Morgan Stanley 6% higher. Bank of America 4% higher. Charles Schwab added the most accounts it has in history. They're becoming a bank, really. 12%, and Microsoft soared. I mean, talk about a really good day for the market. We're now pricing in a 99.8% probability of a 0.25 basis point rate hike. And this is why I believe bond market can go a little higher, because there's really no uncertainty. Uncertainty is what causes bonds to fluctuate. Right now, we already know what's going to happen at the conclusion of their July meeting. So it's really a nothing burger. Like last meeting and the meeting before, you saw fluctuations between 90th percentile, 60th percentile, 80th percentile, 50th percentile. This time it's been like 85, 90, 95, 99. I mean, it's just been moving along. Now, big news is earnings. I'm sorry to move away from the sheet, but this is important. Today you've got Netflix, big tech stock, and consumer discretionary stock, and Tesla. Both of these stocks are expected to do better than expected, and I'll talk about them in a minute. But aside from Netflix and Tesla, look at all the stocks that are coming out with earnings, and you could see what their expectations here. Now, these two stocks are coming out after the closing bell. So far, they're looking okay. They're not looking bad, but we'll get a better idea of how they're looking in the VIP room today, which is at noon, which is one of the reasons why I've opened up my VIP room so that you guys can track earnings along with me so we could see some of these stocks and see how they're doing going into the earnings season. But you could see here, Las Vegas Sands, IBM, Halliburton, Goldman Sachs, STLG, USB, UAL. I mean, what's not reporting today? American Airlines and UAL, a lot of airline stocks. CSX, DHI, a lot of home builders. I mean, look at this. I mean, it's like Philip Morris, right? Travelers Insurance, MMC, KNX, Intuitive Surgical, Genuine Car Parts. So you've got a lot of earnings, and what's important is they're becoming a little more broader. Now this is, wait a minute, this is tomorrow. Excuse me, this is tomorrow. I got confused. Today, sorry, this is tomorrow. Today you've got DFS, Discover Financial Services. You've got Goldman Sachs, Halliburton, IBM. I went a little too far. That's all I did. So Xeon Bank, UAL, STLD, Nasdaq is coming out. M&T Bank is coming out today. Watch out for those small cap regional stocks. Discover Services is coming out today. Alcoa is coming out today. So you've got a ton of earnings coming out. Keep your eye on Las Vegas Sands because that'll impact Wynn as well. Not expecting the numbers to be all that great in light of the slowdown in China. Now let's talk a little bit more about earnings season. Aside from earnings on IBM, Elevance Health, Goldman Sachs, Tesla, Netflix, you've also got building permits. They're looking at a number of 1.49 million compared to 1.496. I think the numbers will be pretty good. We're also going to be looking at housing starts. They're looking at a pretty high number, but if the number's good, it's going to be very, very good for home builders. So keep your eye on DHI, on companies like Pulte, and I'll talk about other ones. Europe. Gains in real estate consumer stocks are leading the market higher, which is really good right now. China closed just about flatline. Weak economic data continued to weigh on sentiment, prompting investors to anticipate further stimulus measures. And if they don't get it, it's going to be a big, you know what, to the U.S. because we have a huge reliance on China's economy for our imports. Japan now, country central bank chief indicated the commitment to maintaining an accommodative monetary policy for the foreseeable future. I don't think that's going to stay that way. I think he's going to tighten things up in order to accommodate their 2% inflation target for stability. As I mentioned, pre-market movers, AT&T got upgraded. Western Alliance got downgraded. And as I mentioned, look at all these earnings. And I mean, these are not small cap stocks. So you've got a lot. You've got a lot a lot to look at today. Again, keep your eye on the bond market. If it continues moving higher, that means there's going to be less pressure on the economy. If there's less pressure on the economy, we may see technology rally again. If there's no negative news on the AI revolution that's eventually happening, don't hold your breath. But let's talk about some stocks that are doing really well right now. In terms of stocks, you know what? First of all, let me talk about sectors. Then I'll get into the stocks. Financials are doing really, really well. Don't hold your breath on energy. It has a little bit to go before it breaks out. I'm just not seeing anything crazy there. Utilities looks like it's basing out. Consumer staples looks like it's just basing, waiting. But when this thing goes, it's going to go, but it's not there yet. Industrial sticks. It looks like a stick. Industrial stocks are still breaking higher. Healthcare is consolidating. Technology is still moving, although I think it's grossly overbought. Communication services looks like it's starting to stall out a little bit. Consumer discretionary is still moving, and if the earnings are good, it's going to continue moving. And basic materials is moving well because interest rates are not expected to go higher in the near term. We have a foreseeable number. We've already priced in two rate hikes, and that's already priced into basic materials. Remember, interest rates, higher rates make basic materials more expensive. So the fact that we're stabilizing is a positive sign. Keep your eye on the financials. They're looking really, really good. Keep your eye on consumer staples. I think they're going to continue consolidating. Keep your eye today on real estate. Where's real estate? Let's look at real estate. There's real estate. Keep your eye on real estate today and financial. Those are the major sectors reporting, and I'm expecting to see upside, not downside. Also, if energy prices stay subdued, it'll be really good for cruise liners and travel stocks and airline stocks. Speaking of airline stocks, now I'd be careful because I think this one's having earnings this week. You may want to just move into the ETF called JETS, but which is doing pretty much the same thing as American Airlines and doesn't have earnings. That's an ETF. But I like American Airlines. I like UAL, which, again, they're doing exactly the same thing, almost identical. I like Pulte Homes a lot, Pulte Group, but I like Pulte Homes a lot. And on the short side, I like Shutterstock. I don't think this Shutterstock is going anywhere. It rallied from 46 to 57. It's overbought. The divergence level couldn't even begin to get overbought. It's got a lizard right here, which it would be a Gilligan's Island, except it doesn't have a gap. So it's a lizard to the downside. I think it's going to come down, fill this gap. I would be buying puts on Shutterstock right now, and I would be buying calls on Pulte Homes. Another good one is GE. One of the reasons why GE has been going up is because they have a lot of money in defense right now. They've become a huge defense contractor, and I like this consolidation. So you've got GE, you've got United Airlines, you've got American Airlines, and to the be careful with the airlines, though, because they've got earnings this week, including today. And to the downside, Shutterstock. Now, before I let you guys go, did you know that dating back to 1953, 70 years, that's 70 years. Wow, I'm getting old. I was born in 1970. A super rare event played out at the end of every single recession. I'm talking 9 out of 9 times. Yes, we've had 9 recessions in the last 70 years, and the same thing occurs every time. 9 out of 9 times. It's been this event's been undefeated. I call it the Great Divergence, and it could be playing out again at this very moment. The S&P 500 is up 20% from the bear market lows, and my number one Great Divergence stock looks ready to turn higher. In fact, get this: 17 hedge funds just loaded up on shares of this company. Now, all you've got to do is claim my number one Great Divergence stock. It's free, no cost. Click the link below. Check it out. You guys are going to love this. Small caps always rally towards the end of a recessionary or an inflationary period. And we may have something hot on the table. Follow the link below. Remember, VIP room, I'll review all the earnings plays. It's at noon today Eastern time. Like, subscribe to our Telegram channel, and comment. And I'll see you guys later. Bye.